Welcome back. This is Brian Kurtz with PremierRealEstateInvesting.com. Thanks for stopping back by for another episode of our Funding Fundamentals video series. Today we're going to be talking about seller financing. Seller financing should get everybody excited because it is very, very flexible and very, very aggressive. If you are looking to buy real estate investment property and you can find a seller that is willing to go ahead and work with you on a seller finance or a terms basis, then you are in the game. Pretty much you don't even have to worry about credit checks for the most part on seller financing. Now, what exactly is seller financing? Let's break it down real basic. Seller financing is where the owner of the property, the seller, agrees to sell to you on terms. So they are basically going to become your bank. Usually when you take care of the paperwork on this, this is going to be known as a land contract, or in some states a contract for deed. A lease option is also another form of seller financing, not really as good as a land contract or contract for deed because you don't actually gain title to the property. You just are able to maintain control of the property. My partner and I, we don't really participate in lease options on the buy side. We do sometimes on the sell side, but in any case, neither here nor there. You gain control of the property and you start making payments. The seller becomes your bank. Now, many people are going to tell you, if you study courses and find out, as you're trying to figure out where you find your way in this real estate investing world, they're going to tell you to put out signs and run ads and try to get motivated the sellers to call you, and then try to put a deal together on terms using seller financing. Okay, here's one of the issues with this right now. If there's no equity in a deal, it's very difficult for you to make a deal where seller financing is involved to work. So, for example, if somebody owes $150,000 on their home and they're willing to sell to you on terms, it doesn't make sense if the house is only worth $100,000 or $105,000. Why would you take over the payments on a house that's worth that is owed $150,000 if it's only worth $105,000? So there has to be equity in there, which means that there are fewer and fewer deals available that make sense on an owner financing basis. Pretty much what you want to do is you want to find somebody that owes $65,000 on a house and just says, hey, take over my payments. House is worth $100,000. But how many of those deals are we coming across right now? Pretty much everybody that I run into tends to be over leveraged. So if you're going to build a business on that concept and that method, it can be very, very tricky because you're going to have to answer an awful lot of phone calls. You're going to have to do a lot of work to generate those phone calls so you can weed through enough of the no good phone calls to get to the good phone calls. So I'm not really excited about seller financing from the traditional way that many people talk about it, but seller finance can work good if you're working in tandem with another investor. So if you have a relationship with an investor who has access to cash and different funding sources, they can buy foreclosure properties like we do. Sometimes those investors will be willing to wholesale the properties to you on owner financing. So you may only have enough cash, only so much. So you may not have enough to do the full purchase of the property and fund the rehab, but you may have enough to put a down payment on the property and take care of the fix-up costs, the rehab costs, just not both. So that works out great because, for example, let's just run a quick scenario deal. We may purchase a property and then wholesale it to you. Usually we prefer to wholesale on a cash basis, or where you get a hard money loan or private money loan, something like that. But because we're flexible, more flexible than others out there, we will sell to people on terms for a small down payment, and that way you can gain possession of the property. You begin doing the repairs of the property, and when it makes sense, you go ahead and refinance the property and cash out, and then you're able to continue forward with the full title in your name. So that is awesome because it allows you as an investor to be able to get involved without meeting criteria of any of the financing sources we talked about before. You don't have to qualify for conventional financing. You don't have to build relationships with private money lenders or small banks. You can get started now. So it's very fast and effective if you're looking to get out of the gate very quickly and get a fast start. All right, so seller financing. Some of the pros to seller financing, like we said, is flexible. It's there if you can find the right kind of deals for you. It's there for you regardless of credit history often, and usually you have to put a little bit of down payment down, but not huge amounts of money. So if you have a little bit of money to get you started and you can maybe get credit cards to take care of the rehab, you can put that together. And it works, like I said, it works really well because of its flexibility. The downsides, the cons to seller financing is, like we said, there's not a lot of it really available out there that makes sense for most investors. And there's plenty of people that would love to sell you on terms, but they owe too much on their house. Simply no equity. Why would you get involved if there's no equity there? So there's fewer deals available where seller financing can be a road in to acquiring the property and putting your stake in the property and getting started to getting it fixed up, getting somebody in there and getting it cash flowing and turning it into a little money machine. All right, so that wraps it up for seller financing. Next time we're going to be talking about lines of credit. Lines of credit are very much available still today in this environment for a lot of people. You're going to want to stick around because we will talk about that in the next episode. Thanks for watching.